Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about STEM's Q3 earnings results, which we did cover the earnings call earlier last week. So if you'd like to see that video, it is available on the channel. Now, this overall was a very good quarter. However, you may be disconcerted or very concerned with the stock price action on Friday. I would re-highlight that while the earnings were very strong, and we'll go through those results today, both using the press release as well as the slide deck that they used on the earnings call, I would call out that at the end of the day, they are currently in the unprofitable tech sector, and they don't look to be profitable until the end of 2023 on an adjusted EBITDA basis, and even farther into the future on an actual net income gap basis. As such, they're going to continue to see some macroeconomic headwinds between higher interest rates as well as the overall market climate. But that being said, I do think that we're going to see some benefits to the overall stock price, and this is something that I think we can benefit from accumulating from a long-term perspective. That being said, I am just some guy on YouTube, and this is not financial advice, it's just my opinion. So in terms of a few of the key highlights, I think they summarize it well in their press release, but I'll call them out specifically. The record revenue is a massive deal. So one of the things that I would call out is this was the largest revenue month, and they beat expectations by nearly $20 million. Now, a lot of that was because they were able to complete a project that was expected in Q4 of this year, so that money did get moved from Q4 to Q3. So that already was a big win in terms of revenue numbers, but the other thing is I would highlight that they continue to execute on delivering on these projects in a very sequential way where we continue to see quarter-over-quarter excellence. In addition to that, we did see an increase in those GAAP gross margins. The key reason I want to call it the GAAP component is because this is how companies are measured on a one-to-one basis. We don't like non-GAAP and we don't like adjusted numbers because those are, again, the company making their own assumptions against their margins. So I think that the fact that their gross margins are increasing is super beneficial. This is something we expect to see continue to increase as more and more software comes online, because the hardware deals are the ones that have the lower margins. However, they come with, generally speaking, 10-year plus software deals where STEM really is able to be quite a bit more profitable. The other thing that I would call out that I'm a big fan of is the bookings component. The reason why I like that bookings number is because this means that they're continuing to go up. Bookings are continuing to increase at the same time that they're recording those revenues. And because of that, it's important to note that this month, or rather this year of 2022, could be the first time that they have more than $1 billion in backlog at the end of this year. And that's something that they highlighted on the earnings call. So they continue to execute incredibly well, and they continue to grow above expectations. So let's head over to the slide deck so I can dive a little bit deeper into some of these numbers. So first and foremost, this is the PowerPoint presentation they used for earnings. This is going to be available in the description down below and can be found on the investor relations component of STEM's website. The first thing that I'd call out is all of this information, because I'm just going through the slide deck, is based off of my own personal opinions, as well as what I was able to glean from some of the information that they provided on the earnings call, which, like I mentioned earlier, they did have or is available on my channel. So just further going down, you can see that those continued results or continued execution on results look very, very strong. You'll note that I'm not paying particular attention to the pipeline, and if you are a longtime viewer of the channel, you'll note that I am in particular not a huge fan of pipeline, just because these numbers can be relatively easy to define depending on who's doing the definition. Are these qualified leads? Are these individuals who have reached out for information? Are these people identified by the sales reps at STEM? What consumes or is involved in this number? And I think that it's very difficult to define, especially when that number just keeps going up at such an incredible rate. That being said, contracted backlog, this is money that people have already signed, and they have said, we want you to deliver on these resources, which this means that STEM is able to execute on these deals, and they'll be able to receive or recognize that revenue at that point in time. It's important to note that as long as they're continuing to develop strong bookings, that backlog number will hopefully continue to go up, And again, it is possible based off of expected bookings between the end of Q3 and the end of Q4, as well as the continued execution, is that this number could be north of $1 billion at the end of the year. So there's a lot of pros associated with this, or with the company in general, and I think a decent amount of this is largely due to the fact that the company was positioned for very strong growth. They're in a niche market. They continue to have very strong product suite. However, they're also able to benefit from the Inflation Reduction Act. So you can see in some of the reports down here that they do highlight it. You'll notice I'm skipping over some of the rah-rah type of material in here because I want to talk about the actual numbers. But it's important to note that when we're talking about the capability of the company to continue to grow, that they can do so via acquisition, and you can see how also energy continues to benefit from the company, but also just organic growth continues to do incredibly well. Now on a go-forward basis, we are going to see year over year the company will not be profitable this calendar year. What we're looking at and what they've highlighted on a recurring basis is that the second half of next year, they expect to be profitable on an adjusted EBITDA basis. The reason why I want to highlight that is because adjusted EBITDA, which I do believe they define here in the end of the calculation, so reconciliation of non-GAAP gross margin, and then further reconciliation of adjusted EBITDA. This is supposed to be profitable in 2023, or rather at least the second half of 2023. One of the things that I would call out means that stock-based compensation is not included in the reconciliation efforts. So something that's important to note there is on a full year basis for 2020 so far, that is equal to more than $20 million. So in terms of the adjusted EBITDA right now, we're currently sitting at 36 million, which means that if we were to drop some of that stock-based compensation, which is never going to happen, I just want to call out why this number is not one that I like, because it is an expense, is that we are looking at just right at about $16 million of negative net income based on an adjusted basis. So the reason I call that out is because even though STEM is not positive on a cash flow perspective currently, I don't see a risk in the immediate future, the next 12 to 24 months, where they would either A, need to do a cash raise via sales, a share sale, or conversely raise debt other means. However, if they were able to raise debt under very attractive terms, similar to what they did with their green bond offering, where they were able to get hundreds of millions of dollars at a 0.5% rate, I think it can continue to be beneficial for the company, and I would welcome that as a shareholder. However, going forward, I want to call out some key items here. In terms of reaffirming their full year 2022 guidance, this is something that I have continued to have cold feet on ever since last year. They continued to reaffirm guidance, and then they had a big miss between going into the Q4 results for 2021. So I continue to have cold feet. However, you can see that A, we pulled a project forward from here, and B, they've expected to have a large project push from Q4. But that being said, reducing their expected revenue, I think, could potentially set them up for a beat. There was a beat for Q3 for 2022, and I think that could potentially be the same way for Q4 2022 Q4. In addition to that, I would highlight that in order to hit this number, they will have to continue to hit a new record in terms of total recognized revenue, well above nearly 50% higher of what they did in Q3. So there is a big deal there. But I think revenue's trending in a nice way. Bookings are trending in a nice way. The other thing is right now we are on the low end of this contractual annual recurring revenue. We're in the upper 40s at this point in time. However, I do think with the large Q4, especially with the more and more of those large hardware projects get delivered on, the more recurring revenue will be locked down. Now, one of the ways that they are managing their expectations on a go-forward basis is that the larger they get, the more benefits they're going to have by way of supply chain. This is something that they announced on the call, is that historically they've locked down supply chain anywhere from 12 to 18 months out. However, they're continuing to build those strategic partnerships and lock down supply relationships and those goods on a much larger term basis. So because of that, I think that they're going to continue to mitigate some of those increases in prices that you're seeing hit a lot of those companies. I still think it's going to happen, but with their pricing power, as they continue to grow into a larger and larger company, they should be able to benefit from those relationships to keep costs down. So I think that that is going to help lead them into positive gross margin growth into next year. Again, you can see those high margin services revenue are what are increasing some of that overall margin on a ongoing basis, especially from the software. In addition to that, I do want to highlight that the Inflation Reduction Act that was signed into law earlier this year is going to continue to present strong growth tailwinds for the company in and of itself. And you can see that that does get taken into account from a key takeaways perspective. So there is a lot of benefits or tailwinds associated with STEM. And as such, I think that they're going to continue to have a strong growth market. So in terms of valuation, STEM is currently still a $1.5 billion company. However, they are not positive on a net income based basis. Their total sales this year should still come into place around $350 to $400 million, trending to the lower end of that, or probably around $350 million. If that is the case, that means that they are still going to be trading in between, at current prices, in between 5 to 7 times current price to sales for 2022 numbers. I think that that's an attractive valuation. However, we run the risk, despite the fact that they said they didn't want to do this, share selling, which would dilute shares currently and could have a negative impact on the overall price of the stock. What I want to continue to see, and one of the reasons why I'm not currently buying at today's levels, is overall market performance in terms of the current sector or growth companies in general continue to decline. The interest rate environment is not attractive for stocks. I think that should the stock continue to decline at that point in time, it would start to load up, again, targeting more of a 2025-esque type of environment where they will be profitable, knock on wood, as well as at that point in time be raking in more than $1 billion in sales, which will benefit the company from a growth perspective as well. All that being said, as someone who's been tracking the stock for nearly 2 years now, if not a little bit longer, I continue to think that this was a very strong earnings performance. I'm happy with the way management continues to run the company. And at this point in time, I don't have a lot of bad things to say. Just continue executing and let's see what happens. If you find this content helpful, please let me know in the comment section down below and by leaving a like. And if you want to talk about stocks or STEM in particular, feel free to join the Discord in the description. Thanks for watching. Talk to you later.